launching, growing, and marketing of publicly solicitable funds like rolling funds, syndicates, etc. I'm trying to make these live streams a bit more pre-rehearsed and composed so they can be shorter and punchier and be less of a rambly stream of consciousness. So today I have for you a brief presentation called How to Build FOMO for Your Rolling Fund Without Being Hypey. So let's define hype. I'm using hype as a catch-all term for the intensity of your promotion. And that specifically breaks down into two different types of hype: the hype of your claims, and then just the amount of activity that you spend to promote it. So your claims would be, is your offer bigger, faster, stronger, easier than the next guy's? We all have seen marketing materials that have some wild, crazy claims that just would not hold up to scrutiny. The quickest way to burn your credibility is to have wild claims that you cannot back up. And this is usually what people refer to when they talk about hype. But there is another type of hype, which is just the level of activity that you're doing. What is the frequency and the volume of media that you're putting out related to your offer? So for instance, you could have a, say, webinar advertising, soliciting investment for your fund that makes very, very defensible, boring, button-down, vanilla claims. But if you promote it every day, there's still amount of hype there, amount of self-promotion, in that although your claims are very toned down, just the fact that you're pushing it out so often is a big factor in your promotion and whether people see you as being hypey. Now, ultimately, hype is in the eye of the beholder. People will call you this, will call you that. You don't have ultimate control over whether people perceive you as being hypey. But if you're launching a fund, you definitely don't want to be perceived as hypey. But you do want to generate hype. You want to create FOMO, but make it feel natural, not make it feel like you are pushing boiler room style people to invest. Now, we're into the pros and cons of hype. What are the pros and cons of the level of self-promotion that you engage in? And I have two pictures of two different female entrepreneurs here, Cody Sanchez and Elizabeth Holmes, two very different characters. I put Cody with the pros of hype because I think she's a great example of how to market yourself in a very above-board, credible, trustworthy way. And then I have Elizabeth Holmes for obvious reasons. So the pros of creating hype is that you're getting attention. If you don't naturally have a source of attention, if you don't naturally have a terribly big following, nothing starts until you can get people to pay attention to you. So if you're the little guy starting from the bottom, you're going to need some amount of self-promotion just to get your name out there. The con is that, well, one of those cons is that you can get your attention from the wrong sources. That could be one, just writing headlines that don't attract the people that you want. If you want to launch a rolling fund, you're looking for accredited investors, particularly who have experience in tech and are comfortable and have a history of writing checks to risky early stage companies. So you could get attention from the wrong sources in the sense that, one, the media you're promoting isn't made for tech investors. It's not attracting accredited investors. You could also get attention from the wrong sources in that you're making wild, undefensible claims, and you're getting attention from the FTC or the SEC. Now, another pro of creating hype is that you create, quote, fast credibility. If you don't have a name, then by producing a tremendous volume of promotional material, you can get your name out there, tell people what your track record is, and create a reputation, quote, on the fly. The problem with that is, of course, that fast don't last. If you're building fast credibility, there's a good chance that it's not going to last long. The house of cards can fall apart. And I used the picture of Elizabeth Holmes here on purpose. Obviously, everyone is afraid of burning their reputation. We're all afraid of saying something that we just can't defend and losing all credibility that we have. And that's on the far end. So it's very easy to be overly conservative about the amount of promotion that you're willing to do. But I have the picture of Cody Sanchez here as sort of an emblem that you can use hype. You can use a good amount of self-promotion in a very above-board, ethical, credible, responsible way to grow your success. Perhaps similar into how you can absolutely, at a startup, raise too much capital and ruin the company, but you can also raise just the right amount. It's not a binary. Third pro for creating some amount of hype or having some sort of focus to your marketing and your promotion of your fund is that a well-written pitch can force you as the GP to make a more specific, clear, articulable goal and target for your fund. I've used the example of Cody Sanchez's promotional material in previous live streams, and how Cody Sanchez went beyond a fund thesis and into a big idea. If you wanted to define Cody's fund thesis of her contrarian capital rolling fund, you could, in very plain technical language, say that she invests in software as a service companies that service brick and mortar SMBs. And you would be correct that that is technically true. But what paints a more clear vision for the fund and a more clear target for her scouts to find is that she believes that boomers are retiring in droves and that private equity is rolling up these brick and mortar boomer-owned businesses, and that these brick and mortar boomer-owned businesses still operate with fax machines and snail mail, and that private equity, to roll up, needs to automate and modernize these companies, and to do that, they're going to need the right software. And her fund invests in the software companies that are going to allow private equity to scale up and modernize these old brick and mortar businesses. That's a bit more of a colorful, more interesting, memorable thesis, but I think it also paints a more clear picture for who she herself is targeting. I think that by articulating that that big idea, her scouts probably have a better idea of what companies they are looking for, rather than if she had merely described herself in a very boring technical way of investing in SaaS for SMBs. Now, the flip side of that, the cons, is that if you're making ridiculous claims, those can lead you to creating ridiculous actions if you're trying to be consistent, or directly into fraud if you're lying. But through this presentation, I want to provide a lens for how you can use the right amount of hype and self-promotion without even approaching the bounds of fraud or ridicule. So this is the spectrum of hype. I hope you like it. I made it myself. We have here a spectrum, a bar, and then a little, I'll talk about the bottom corner in a second. But I've arranged some well-known fund managers according to how I assess the level of hype that they put in, and how there's a spectrum for how much hype or self-promotion or intentionality that you as a GP can use. So on the bar here, we have sort of three categories. We have our Sahils and our Austin Allreds. These guys launched their funds, their rolling funds, in a extremely hypeless manner. Sahil put out a tweet and typed up his memo on AngelList. Austin did the same thing. In fact, Austin didn't even want to launch a fund. Sahil sort of twisted his arm in a very charming way into doing it. These Sahil and Austin are the example of the 0% hype. They don't market their fund, really. They don't have a media team. Austin himself says that he manages his fund so as to require the minimum amount of time from him on a daily basis as possible. A fund is not a part-time job for him. It is a hobby. On the far end of the spectrum, In the 100% hype, we have our Grant Cardones, our Tai Lopez's. These guys have media teams who are buying ads, writing landing pages, probably hiring conversion rate optimizers to split test the conversion of should they use a red button or a blue button. And they have phone teams as well, phone closers. They've probably spent a 6 or even low 7-figure amount on the promotion of their fund. And then you go further from that, then you have the absolute criminal. You might recognize this guy in the corner. This is Carlos Matos, aka Mr. What's up, BitConnect. BitConnect was a giant scam. It was full of hype. They threw this absolutely ridiculous on-stage event in Thailand where Carlos sang sort of to the audience like some sort of Ponzi fund Tony Robbins. That, of course, is the horror story of what hype and promotion looks like. That's why Carlos here is sort of off the deep end. Everyone on the spectrum here, from Sahil to Grant Cardone, is above board. You might not like the image of a Cardone or a Tai Lopez, and I can certainly understand why you wouldn't want to be perceived that way. But there's nothing criminal about how Tai Lopez runs his fund or how Grant Cardone solicits tens of millions of dollars for his fund. You might think it lacks taste, but there's nothing criminally wrong with it. But I do include Carlos as an example of the horror story. Now, the horror story on the opposite side of the spectrum, on the 0% side, if we were to do something off the deep end here, it would be not criminal, but impotent. It would be someone who never gets an investor, never gets traction because they simply don't have an audience or any sense of self-promotion whatsoever, and they're unable to accomplish anything. But right in the middle, we have our Goldilocks spot. The porridge is not too hot and it's not too cold, it's right, and that's Cody Sanchez. And I keep returning to this example of using Cody Sanchez for the right way to market a rolling fund because she is a self-promoter. She has a media brand. She does have employees who create content with her for her brand, but she does it in a very above-board, credible way. And I think she's a great example for the founder who wants to become a funder. Because hype is dictated by necessity, not by choice. No one wants to have to market themselves like a Grant Cardone or like a Tai Lopez, but they may have to. Now, Cody Sanchez, for instance, she wasn't living in the heart of VC Twitter. Sahil and Austin were able to launch their funds with no hype at all because they already had the ear of great investors like Mark Andreessen and Naval Ravikant, and they already had the right audience. And we're going to talk about the importance of audience in a second. But for now, I want to emphasize that hype isn't bad. Just like raising money, you can raise too much, but you can also raise the perfect Goldilocks amount that greatly helps your effort in raising your fund. Furthermore, hype takes work. It's hard to promote. Tai Lopez has a full-time phone team to help close deals with possible LPs. He's paying salaries. Now, most of us would not like to do that. Most of us would like to be Sahil and just put out one tweet and raise millions of dollars per quarter. But it's not possible. When you see someone who's putting in a tremendous amount of hype, that is a compensation mechanism for them not already having the audience or the track record to do something. For example, Cody Sanchez comes from the world of Wall Street. She's never had a job in tech or as far as I know, at a startup. She's coming from the world of mergers and acquisitions. So for her to launch a tech rolling fund, she had to put in some intentional work to promote herself and gain the ear and the trust of accredited angel investors. Now, What ultimately dictates the amount of hype, the amount of promotion, the amount of money that you spend promoting your fund. Tai Lopez, I'm guessing, has spent high hundreds of thousands to low millions of money because he has professional copywriters, media buyers, and a phone team promoting his offer, not to mention the legal team that reviews all the material. Do you think that if Tai Lopez could have just tweeted out that he was raising money and raised all the money he needed, do you think he would have spent the time and the money on a full-time team? Probably not, but he was required to by the constraints of his audience. Your audience dictates how much promotion, how much energy into promotion you need to spend. And the right audience is more important than the big audience. So let's compare two audiences here. Tai Lopez's organic audience and Sahil's organic audience. So why does Tai Lopez need to spend hundreds of thousands or possibly millions of dollars to raise money, whereas Sahil hasn't spent a dime? He just puts out a tweet and money appears. It's about the quality of their audience, not the size, the quality. Who is Tai Lopez's audience? Well, Tai Lopez built his name based off selling business opportunity courses. Who buys business opportunity courses? Mostly broke 20-something males looking to make their first dollar online. Certainly not accredited investors, really not investors, period, or even entrepreneurs. Tai's audience is more so the wantrepreneur audience. No experience investing, no accreditation, and probably little experience in tech as a whole. I am going to say that is why Tai Lopez had to use paid ads to raise money for his fund, because he had to reach people outside of his audience. He had to reach accredited investors who largely were not already following him. Let's compare this to Sahil's audience. In fact, let's go to their Twitter accounts. Tai Lopez has 670 followers just on Twitter. He has a huge YouTube and Instagram presence. He says that across his channels, he has around 10 million followers. Sahil has 290,000 followers. That is less than half of Tai's followers just on Twitter. And Sahil doesn't have an Instagram audience. He doesn't have a YouTube audience. Or there's a very small one, smaller than his Twitter. But the right audience is more important than the largest audience. Depth over breadth. If we look at who's following Sahil, he has Silicon Valley people. He has Mark Andreessen, the founder of Morning Brew, Sean from My First Million, Pomp, Naval Ravikant. If we look at Tai Lopez's audience, he does have some tech people. Pomp is following him, as we can see here. Sean from My First Million is following him, but Mark Andreessen isn't following Tai Lopez. Naval Ravikant isn't following Tai Lopez. Although Tai's audience is larger, it's not optimized for the raising of, it's not optimized for solicitation from accredited investors. So if you are, that's why I always say that if you're raising money, if you're looking to raise a rolling fund, it's far more important that you solicit the right audience. You get the Kalkanises, the Andreessens, the Sahils, rather than going very broad. If you want a broad audience, you can post dance videos to TikTok, but the people watching you won't be accredited, and they certainly won't have a history of cutting checks to risky early stage startups. So we all want to generate FOMO, right? But we don't want to be perceived as hypey. Well, good salesmanship, good hype is a lot like plastic surgery. It's invisible. You shouldn't quite know it's there. A good salesman doesn't feel like he's selling you. The used car salesman is selling used cars because he's not a terribly good salesperson. If he was a better salesperson, one, he'd be able to sell a better product, and two, he wouldn't feel like a used car salesman. Now, the hallmark of bad sales, of bad hype, of seeming hypey, is rushing things. You're being pushy. And why are you being pushy? Because you're operating on a very short-term time frame. Um, when you have to cram an introduction and presentation of an opportunity and the presentation of your track record and credibility and the offer into, say, a 1-hour pitch, you have to be it's very rushed, it's very pushy. Why was Sahil able to raise money so quickly? Well, because he established his audience long before he ever raised a rolling fund. His big article, How I Failed to Build a $1 Billion Company, was published at least months before the announcement of his rolling fund, probably before the rolling fund platform was announced by AngelList. And my conjecture is that it's possible to take the hallmarks and the principles of good selling, of good pitching, which is capture attention, stir emotions, present credibility, present opportunity, close the deal. But you can generate that hype without seeming hypey if you expand your timeline. And if instead of having to cram the promotion of your fund into, say, an hour-long pitch or a month-long promotion, if you can slowly build your relationship with the audience over the course of a year or two, you will have a much better reputation and the money will come in much faster. And that's the part 2 of this presentation that's going to happen tomorrow. It's a little idea I'm playing with called extending the sales letter. And I'm going to have that for you tomorrow. Same bat time, same bat place. Thank you guys for watching. I'm trying to make these live streams more prepared, more consistent. It really matters to me a lot that anyone is watching at all. I am Daniel, the Rolling Fund guy, and I tweet and live stream about the public solicitation of publicly solicitable funds like rolling funds.